The Mag 7, the magnificent 7 largest companies here in the US have had such an amazing run the previous couple of years. This year, a different story. Is the Magnificent 7 no longer magnificent? What does it mean for your portfolio? That and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. The S&P 500 is commonly referred to as the stock market. I call that the stock market, not the Dow Jones. Dow Jones is just 30 companies and not even the 30 largest. They sort of mix up between industries and so on. But the S&P 500 is roughly the 500 largest U.S. based companies, is publicly traded companies. And does that mean, because it's the largest 500, does that mean each company or each stock gets an equal 1/500th weighting? No. The S&P 500 is a cap weighted index, a market capitalization weighted index. So the number of shares outstanding times the share price equals the value, the market cap of that company. And the larger the company, the more weight, the more influence that it has in the S&P 500. We'll get this. If you haven't been watching, of course, over the past 3 years, this has been the story. So, which is why potential change is noteworthy as well. The Magnificent 7: Apple, Amazon, Alphabet, which is Google, okay, Microsoft, Meta, which is Facebook, Nvidia, and Tesla. Those 7 companies out of 500 make up a third of the entire stock market. So think about it. If those represented different size, bowling balls, and you're kind of weighing them on a scale, as those move, they tend to move everything else. As those move, they have an outsized impact on the overall stock market, the S&P 500's return. And when everything's going good, it's great, right? And like we've had the past couple of years. But when the tide shifts and things change with those 7, and they're all sort of connected to technology, yes, similar industries, but not all the same industry, but all connected to technology. When the tide shifts and those 7 start struggling, likewise, the entire index is going to follow. Now, I want to share some perspective as of the end of April. I know May has been a different story when I'm recording this, but just saw these charts, and it is just helpful perspective about what's been happening with the Magnificent 7, and really calling into question, are they still magnificent, or do you need to make sure that you're staying disciplined and diversified within your investments? So this is just looking at the S&P 500 and the Magnificent 7 year-to-date 2025, but through the end of April. Okay, we don't have the month of May is very different. We haven't seen the end of it yet. This is just going to the end of April. Take a look, the individual performance through April by each of the Magnificent 7 stocks, and then what the collective, the average performance of those Mag 7s through April, down almost 15%, whereas the S&P 500 was down about 5%. But if you pull those 7 stocks out of the S&P 500, what's that performance through April? It would have been flat. And that's the exact opposite of what we've seen the previous couple of years, where the Magnificent 7 has performed so well in 24, in 22, even in 21, and that pulled the S&P 500 significantly higher. Now, this doesn't show the S&P 500 return on this chart. This, thanks to Dimensional for these slides and this research. They're not showing just the pure S&P 500, but you can see in 2024, the Mag 7's return was 48.4%. That is incredible. The S&P 500, we know, was up nearly 25% in 2024. But if you take the the Magnificent 7 out of the S&P 500, it would have only been up 16%. Very similar story in 2023, except to even greater degree. There was an enormous rebound in 2023 from the Mag 7. Collectively, those 7 returning over 76% in 1 year. The S&P 500 up over 20% that year. But if you strip those 7 7 out of the S&P 500. Still a great year, but only up 13%. Almost half of the S&P 500's return in 2023 was just from those 7 companies alone. So you can see in this chart that illustration of these 7 are such a high concentration, high weighting of the S&P 500 that they pull it one direction or the other. So now the question is that sustainable? Is this what we've seen really for the past, this year, thus far year to date, and much of the past 5 years, is that sustainable? Is that sort of the trajectory that the market's going to be on moving forward? I thought this chart was very, very interesting. Right now, even though the Magnificent Seven only makes up about 11% of the earnings of the global market, the weighting, the actual stock weighting, is 19%, almost 20% of the entire global stock market. Again, that is astronomical. That is wild. But the other point there, that the earnings make up this percentage, but the weight makes up this. So there's a lot of optimism about these 7 companies, and for good reason. However, if these companies continue to outpace the S&P 500 or outpace the stock market, and let's not assume that these companies, their performance is a grand slam every single year, but a strong return, a 25% return each year for the foreseeable future, whereas global markets, not just the S&P 500, global markets only return about 8%. You'll see that 5 years from now, these companies, instead of making up 19% of the global stock market, would make up 33%. 1/3 of the entire world's economy and stock market, just these 7 companies. 10 years, though, at the same clip, these 7 companies would make up half of the entire global stock market. 7 companies. That's hard to believe. Harder yet to believe if these companies continue to perform at, above market, 25% return each year for the next 15 years, they would make up 2/3 of the entire world's stock market, global stock market. Hard to believe that any one company or 7 companies will have that sort of weight when you look at the entire, what it takes to operate the entire global economy. So the rise that we've seen in both significance and performance, and now influence because it's top heavy, the rise that we've seen with the Magnificent Seven, should we expect that moving forward? Based on these set of charts, there's no denying it. This has been an unbelievable force in the markets, moving the return one way or another. And yet this last chart, thinking and expecting that these 7 stocks will continue to outperform the overall markets, and then will continue to balloon into a greater and greater share of the global economy. That's hard to imagine. For me, I would stay consistent with your investment approach. I would make sure that you're diversified. These Magnificent Seven are reasons to stay invested in the U.S. stock market, but also the global stock market. And that's the other thing. This year, at least through April, May is a different story, but at least through April, everything in the investment world has worked except for U.S. stocks. If you think about it, and I know I'm overgeneralizing, but international stocks have done well, emerging markets have done well, bond investments have done well, real estate investments have done well. What has struggled is large U.S. stocks, mid-cap stocks, and small-cap stocks here in the U.S. Now, I know the Mag 7 isn't moving all of those things at once, but the message is to stay diversified. What's your investment strategy or strategies? Are those strategies connected with your financial goals, what you're saving for, and are they connected with your risk tolerance? That's the approach that I'd encourage you to take with your certified financial planner, whether the Mag 7 stay magnificent or whether their time to shine is over and they've lost their luster. Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.